let's look at what happened today. Huge fluctuations, but more sideways type stuff. And unfortunately, went all over the place, all over our, okay, so first it came down, hit the break even. I moved to break even, and then it came right back. Basically, as soon as that happened, boom, right back. We made a few pips, and then at that point, had no other trade choices in place. So for the week, let's look at how we did. March 13th, 205 pips in the red. So not good, but you know, who cares? Not that bad. And next time, we're going to go from basically one of these up to one of these. I mean, if this trade had gone the way I thought it could have, we're looking at like 425, more than double. More than that 2-to-1 risk-reward ratio. Let's think about what we could have done better. And actually, let's put that in the slides for next time. Post-mortem. Let's see. Pay more mind to volatility changes. And what else? I don't like this weekly format. I think it really locks you into a decision that should be changed depending on conditions. So when things really started to look range bound, but big juicy ranges, what I really wanted to do, my instinct, for example, it came down to this break-even line, was just let's close there, because we'd already, especially since I was trading heavier than when I entered, we'd already recovered our loss. And I strongly suspected that it was going to, go back, that there's going to be a lot of indecision in the market because of what's happened and the giant stimulus packages that are coming out, that basically nobody's going to know their ass from their tea kettle, and this is going to just bounce. I call these cratchets when it goes back and forth on a horizontal range, a stationary band like this. It's going to cratchet up and down. So that's how I would have liked to have traded it, but since that's not how I presented the trade when I started last week on Monday, I just kept format. But that really restricts you. And I don't think that's what good trading is about. It's not about, you do need to stick to a plan, an overall plan, but you also need to be agile. And there's no agility in this system. So I don't know if I'm going to do trade of the week anymore. Maybe we'll do trade of the day. Maybe I'll just trade and you can watch me trade. I don't know. I don't know what people want because I have no viewers and no subscribers and no messages, no comments. It's quiet, too quiet, as Twitch likes to remind you. What else could we have done a little better on this? The good things are we didn't overtrade. We didn't revenge trade. We didn't say, I gotta make up for the lost time or anything. Yeah, we did have to pay more attention to volatility. And let's reflect on that a little more. But that's one thing to think about. One thing is sometimes as much as I can handle. And that is the trade of the week and maybe the end of the trade of the week. Shall put that slide away for a while, maybe. What am I looking at for next week? I don't know. I mean, more of the same, I think. I suspect that the market will wake up with a hangover tomorrow, and then it'll descend a little more, and then maybe the enormity of the drop will sink in, and then it'll bounce. I'm expecting large, wild swings in a few instruments. Oil probably is going to recover a little bit. It's probably going to come back at least halfway from the point where it dropped up here. So that's a big trade. Gold is interesting. It's interesting how it just despite the fear, just crumbled. And so that might be an interesting bear trade, especially as things start to recover. Assuming they do, which they might not. The pound, quite interesting. Again, I also expect it to bounce back to about halfway there. Aussie yen, I think we're done with the Aussie yen. Let's see. And then the US 500, well, I do expect it to come down again. I don't know if this is the low. It might be. It might be after the worst trading day since 1987, they say. That might be it. And you can see that it's completed. It's completed this measured move type idea that I definitely exceeded it by quite a bit. So I think that you would definitely want it to break some of these peaks first before you start saying that we're back in a bull market. I would be very careful. But like I said, a big drop like this needs to retrace. It needs to come back, and it can come back quite a bit. Come back into normal trading territory where people start feeling good, and then drop again. It'll happen within one of these angled lines here. So a few different options, and I'll decide what we want to do. Maybe we'll look at all of them because it'll give me more to talk about. Yeah. All right, so let's do some education. Something quite fun planned. Something I've been planning to do for a while. Oh my goodness, I thought I was organized. It just never seems to be. You know what? I need to close that up, I think. So we'll leave that open. All the tabs open all the time. Still getting better with the shortcuts. All right. I'm calling this segment Baby Pips Rehab. This is the first day we're going to do this for a while. I think this is going to be the trading education for several weeks. Because the way most people learn how to trade is they go to Baby Pips. Everyone says go to Baby Pips, learn how to trade from Baby Pips, and then you start from there. And I'm going to explain what's wrong with that. I'll also explain what's good about Baby Pips. There's definitely a good foundation of basic knowledge there. One place. It's friendly, it's accessible, writing is easy to understand. So there are good parts to Baby Pips. I'm going to come down hard on them, but I don't want you to think that I'm completely critical. I can see the good and the bad. Anyway, if you don't know what Baby Pips is, just go to babypips.com. The school is at /learn/forex/preschool. And I'm just going to go chapter by chapter, looking at the things that I'm going to give you my notes, my summary. I can't show you the actual site. I think that would be infringement, especially since I'm being critical, not promoting it necessarily. But you can easily find it on the internet and go through the chapters with me. The first chapter is called What is Forex? So if you don't know, Baby Pips is a website that offers a course for new traders to learn how to trade the Forex. Is it any good? Well, I took the course. I found it to be suspicious at best, and I ended up blowing 2 accounts before I figured out that I'd learned something worse than nothing. I'd learned the way that retail brokers want you to trade. It's a method that seems logical, maybe even scientific on the surface, but it has no basis in reality. So I've perhaps somewhat churlishly redesigned their logo. First of all, you should know this is only my opinion, and my opinion is definitely the minority. Yeah, a lot of people love Baby Pips and think it's totally the way to go. Most people, even successful traders who make no use of anything taught at Baby Pips, will tell you to start learning there. Why? I have no idea. I guess it's tradition. I suffered, so you should have to suffer too, kind of thing. There's a lot of that in trading communities, forums. I don't know. I don't think Baby Pips is intentionally trying to mislead you, although sometimes I have to wonder. But they do end up giving new traders a false sense of security. Same with broker. So maybe I should have called it the School of Illusory Competence. Their product is designed to remove uncertainty, which feels good. People just hate uncertainty. And so there's no shortage of people lining up to get this product, the product of alleviating uncertainty. However, learning to live with uncertainty is a necessary part of trading, and becoming a competent trader doesn't start after graduating from the School of Pipsology. I should also mention that very recently, Baby Pips has done an overhaul of the course with new lessons, some of which I haven't taken yet. And just skipping through them, they do seem to be made up of useful basic information. Maybe it's a little overly cute. Format is somewhat porous, but for new traders, some of these lessons will definitely be of value when we go through them, which is why this is more than just an exercise in trolling. My opinion aside, is Baby Pips the best place for newcomers to learn about trading or trading Forex? Objectively, no. I'm going to cover some resources that I think are better. But since 99% of new traders start with Baby Pips to begin their miseducation, and since we need to think, we need to start somewhere to learn the basics, this seems like it's as good a place as any to start with debunking some of the myths, misconceptions, and voodoo, which is my pet term for unscientific, superstitious nonsense that people believe that plagues newcomers. All right, chapter 1, what is Forex? As I mentioned, the early factual lessons on Baby Pips are actually excellent, and they contain basic knowledge that every FX trader should know. So here's my basic summary. The little check marks and X's represent what I agree and don't agree with. Forex is a global market. It's traded everywhere in every country. Certain parts of the world are more active than others at certain times. I'll talk about that when we talk about sessions. Why is there no check mark here? Exchange currencies, that is true. I missed a check mark. That goes there. Exchange currencies. Basically, well, we'll talk about what exchanging a currency actually means in more detail. But currency values are always fluctuating. Very true. And traders can profit or lose by buying one currency and banking the difference in price over time compared to the other currency. That's the basic idea. Forex daily volume is 5 trillion. So this is something that every beginner lesson tells you. Forex volume is huge. It's huge compared to the New York Stock Exchange, which is only, I don't know, 20 or 30 billion dollars a day, whereas $5 trillion exchanges hands Forex every day. This is sort of true, sort of misleading, because most of that $5 trillion is interbank exchanges that don't actually affect the price currency. And of the remaining portion that is, you would actually term the retail volume, the $300 to $400 billion figure that they have here, most of that is also interbank traffic, which is undertaken on dark pools, which has no, I mean, it does have an effect on price, but not in real time. And so when you think about what the actual volume of the Forex market is, the actual retail Forex speculator volume, it's much smaller than you think. And you can have an influence on it. Individuals can have an influence on price. I mean, that's controversial. That's a controversial statement, but I'm going to say that it's true and that we can prove it to an extent. It's open 24 hours a day, 5 days a week. That is true. It takes a break on Saturday and Sunday. I mean, this is obvious, but even I didn't know it when I was starting out. The Saturday and Sunday days are from your brokerage standpoint. And since most of them are starting their day at GMT -2 or so, that means that, you know, Monday morning could be on pretty late Sunday afternoon, depending where you live. Trading shifts from one center to the next: Sydney, Tokyo, Frankfurt, London, New York. I'm disagreeing with this because nothing really shifts. There are official sessions that are named, right? People talk about the Asian session, the London session, the New York session. And definitely traffic explodes when those things open up. But generally speaking, anyone can trade at any time. And it's not like these people take breaks. And since most trading is done algorithmically, not by human beings at all, definition, the division between those sessions is blurring all the time. What's traded in Forex? Money. No. I mean, for us, no. What you're trading is called a contract for difference, or some variation of that. It's basically a form of scrip. It's some derivative product that is based on money. You'll never be actually taking possession of the currencies that you trade. No retail brokerages allow that. So really, you aren't trading money. You're trading some sort of quasi-money or scrip issued by your broker that is symbolic of money. The exchange rate of a currency against other currencies is equal to a country's economy versus other countries' economies. No, that's fundamentally not accurate. Exchange rates are not based on economics. They're based on perceptions of economic health and forward-looking estimates of a country's economic prospects, if they're based on anything at all. Most fluctuations in currency's value are cyclical or based on long-term prejudices. Those are the major currencies that are usually defined in the FX world, but these are just the currencies that most brokers offer for trading. They're not necessarily most traded. So here are the major currencies: US dollar, pound, euro, Japanese yen, Canadian dollar, Aussie dollar, New Zealand dollar, Swiss franc. We'll talk about what these codes mean later. Well, right now, pretty much. The 3-letter International Standards Organization currency codes. The first 2 letters are the country and the last letter is the currency. That's usually true. I don't know if it's always true, though. Like, for example, ruble is RUB. So what does the B stand for? If the Russians don't call it a ruble, what do they call it? Pretty sure they do call it a ruble. So it's like Russian. Anyway, RUB is, the B doesn't necessarily reflect the name. Unless in Cyrillic letters, maybe the B is an R. I have no idea. Currencies have nicknames, as do some currency pairs. That is very true. US dollar has all kinds of names, but people often refer to it as a greenback. Pound is pounds, the yen is yen, the euro is euro. My wife is home, she should probably interrupt us. Canadian dollar is loonie, the Aussie dollar, Aussie, Kiwi, and the Swiss franc. Swissy. People do actually call it the Swissy. Sounds ridiculous. Forex trading is simultaneously buying one currency and selling another. That's right. The major pairs are most liquid. That's true. Now, major pairs, did we? Can I go back? We used to say what a major, yeah, major currencies are basically these big ones, big rich countries over here. But when people talk about the majors, maybe I have that in a different slide, but the majors are currencies that are backed with the United States dollar. The United States dollar is the king of currencies, and we'll talk about that. Major pairs are the most widely traded. That's sort of true, but not always. For example, the euro to the pound is one of the most traded currencies around, and it's not considered a major because it's not backed with the US dollar. It's the euro and the pound pair. By the way, when I talk about a pair, what I mean is I'm talking about the currency that you buy, the counter currency, with the currency that it's measured against. And we'll talk about how that works in a future lesson. But currency pairs that are not backed with the US dollar are known as crosses. So, for example, that euro pound, it would be EUR, GBP, euro pound is one of the most actively traded pairs. Most actively traded crosses are based on the euro, the pound, and the yen. That's true. The crosses have foreign exchange nicknames. That may be true. I don't know. There's a table on Baby Pips that I can't show you, but it's got all kinds of crazy names for currencies, like the euro to the Norwegian kroner is called a Naki or a Euro Naki. I didn't know that. Maybe. I don't know. It depends on the circles in which you hang out, I guess. Exotic pairs are any currencies that are not a major, not cross. That's right. The G10 currencies, I mean, that's not really right. I didn't mark it as incorrect, but the G10 is a definite thing in which the Scandinavian countries are not placed. But in that G10 list of currencies, Baby Pips has a lot of Scandinavian currencies in it. So I don't know what G10 currencies are. Maybe. BRICS. Most of the BRICS currencies aren't offered by most retail brokers, except maybe the Russian ruble and the South African rand, ZAR. And then sometimes maybe the Brazilian real available, but it'll have a ridiculous swap because all the real does against the US dollar is go down. So the swap is crazy. You can't hold that trade for more. Forex market size and liquidity. Oh, you know what? Before I do that, let's go back and just let's just look at talking. So here you can see Global Prime, the broker for this particular account, is helpfully showing us the majors, and they're highlighted in yellow. All of these currencies backed by the US dollar, and they're so widely traded and so liquid that usually their spreads are nice and tight and low. Right now they're huge and wide because we're at the end of the day on Friday. Remember I was talking about the fix that comes in on a brief window at the end of every trading day. Brokers widen their spreads up during that point, and then they shrink again. They contract once that fix has sort of been undertaken. Here you've got common crosses. Pound Swiss, Canadian yen, pound yen, Aussie Kiwi. Those are most of the things that a broker will let you trade. Now, am I showing everything right now? Here we go. These ones highlighted down here in green would be considered exotics. Aussie to the Singapore dollar, the Euro Naki, Pound Naki, I guess. I don't know. The CNH, Hong Kong dollar. Is CNH the Chinese yuan? But tell me in the specification. Anyway, as you can tell, exotics are not something that I trade very much, and I don't recommend that anybody get into it unless there's some specific political event going on. So, for example, when Trump was threatening the border wall with Mexico, it was a really good time to trade the US dollar to the Mexican peso. I'm just trying to find what this thing, I'm sure it's got to be China. But nobody's naming it. It's DCNH. Yeah, it's China. You can tell by the comments, but so I guess that's got to be the US dollar to the yuan. Well, that's cool. The Global Prime lets you trade that. I did not know. You got some other things here, the Thai baht and silver to the US dollar. The rest of these gold things are precious metals. Commodities like oil, and then indices are in blue. And crypto is in purple. I hope that my stream is big enough for you guys to be able to see what's written there. Anyway, just thought I should show stuff. Continue. All right, so the foreign exchange market is not centralized like the New York Stock Exchange or something like that. Let's see here. It's considered an over-the-counter market because it's run entirely on an electronic network. And that means that it's also less regulated than some other markets because there's no central authority that says we are handling all the clearing and the rules and the people who are allowed to trade and that sort of thing. Trades can take place anywhere. And I said, yeah, that's not necessarily wrong, but it's not necessarily different from other markets. Like you can go on the internet, wherever you live, on your phone and place a trade on the New York Stock Exchange if you have an account with a broker that lets you trade on the New York Stock Exchange. Your location, your physical location doesn't matter necessarily, even on centralized markets. It's the biggest and most popular market. Biggest, yes. Most popular, I don't know. And when you think about like the money that changes hands on futures markets, and the relative sophistication of future traders compared to forex traders, I really don't know if we can say that it's more popular. Maybe it's globally more popular because people with less money like to trade forex. That might be true. US dollar, the euro, and the yen are the most traded currencies, yes. And the US dollar is king, yes. Now, the United States is the largest economy in the world. They're the military superpower. They have the world's reserve currency, which means that when people want to buy things like gold and oil, they usually have to pay for them in US dollars, which means other countries have a big need for US dollars and are always demanding it. This drives some people crazy, like Trump, who really wants a low US dollar, is constantly complaining because the US dollar value is going up. And he can't do anything about it because people need US dollar foreign exchange reserves. And as long as you need something that's in demand, the price is going to go up. Their statistic was that 64% of foreign exchange reserves are US dollars. But yeah, it's more like 58% now. And I researched that with this link. does. It's control shift. So you can see that I basically took the claims in US dollars here, divided it by the total foreign exchange reserves for Q3 2019, and came up with a slightly different figure. It makes sense. Now, where's the US dollars right now? Yeah, see, it shows it sort of steady. It was increasing up until 2017, and now it's sort of tapering off. There's been a lot of talk about some other currency becoming the standard reserve currency of the world. I don't think it's going to happen anytime soon, probably not in my lifetime, but it is conceivable. And it would probably be China doing something. But for now, it's the US dollar. There are some considerations about why a new player might not want to be the dominant currency. The United States does have certain issues caused by having their currency being the world's reserve currency, but I mean, that's beyond the scope of what I'm talking about. The United States has a stable political system for now. Most currency trading is based on speculation. No. That's not right. Here, let's just look at this right over. Who trades currency and why? The foreign exchange market is the largest financial market in the world. Foreign exchange market is a global marketplace. Market participants use Forex to hedge against international currency and interest rate risk. Right? That's not speculation. I mean, you may have some anticipation of what's going to happen with interest rates. But hedging is different from speculation, and hedging is the biggest amount of traffic. Most currency trading is based on hedging, not speculation. Most of the trading volume comes from traders that buy and sell based on intraday price movements. Again, that's wrong. Most currency trading is based on commercial hedging. Without commercial entities needing to hedge their foreign exchange risks, the market probably wouldn't even exist, or it'd be a sideshow to some other market, like over-the-counter pink sheets is to the US equity markets. So I don't know where they're getting this value either. The trading volume brought about by speculators is estimated to be more than 90%. I can't find that statistic anywhere. But we already know that the retail trading segment of the 5 trillion market is only a $300 to $400 billion market, subdivision of that market. And I think most of that is bank-to-bank trading. So I find that figure to be impossible, although I can't. Liquidity in the FX market is extremely high. That is true, unless there's a disaster. So I'll talk about this later, but in 2014, early 2015, the Swiss currency was depegged from the United States dollar. They depegged from? And floated freely, and that caused a huge crash in USD CHF, Swissy. And I mean, the fallout from that is still being felt because a lot of brokers just said, we lost so much money, we can't pay you. We're not giving you the money that we owe you. It was a mess. And that was caused by liquidity. The liquidity providers suddenly pulled out, liquidity dried up, and the price just tumbled in a very short period of time. And you can still see that spike if you go to a chart. Baby Phipps has a page called 4 Ways to Trade Forex. Really, the ways are vehicles, different instruments that you can use. FX options. Options are, of course, the right to buy and sell assets at an option expiration date. And they are traded on the Chicago Mercantile Exchange. I forget what ISE stands for. Oh, that's not right. International Securities Exchange? Okay. And then PHLX is Philadelphia. Pretty sure. Yeah, Philadelphia Stock Exchange. So some of the disadvantages they mentioned about options are that market hours are limited and that they have less liquidity. Maybe that's true. I didn't put any check marks because I don't really know that much about FX options. Don't trade them. FX futures are contracts to buy and sell assets at a price in the future. They're offered through the CME as well. They're well regulated. I believe that is true. And they're transparent. I had to put that as wrong because I don't think there's anything transparent about currency prices. Transparency and currency pricing, definitely I wouldn't associate those two things. Foreign exchange ETFs. ETF stands for Exchange Traded Fund, and it's basically like a bundle of similar instruments that get sold together, and they don't have management fee the way mutual funds do. Here's a link that you can go to see the most popular exchange traded funds here. Let's see if I can. Yeah, so here you go. These are the symbols and what they represent. That's the dollar bull fund, the US dollar bull fund. Of course, it went down today as the market went up. Euro, the yen, basically their capitalization is directly proportional to the popularity of the trading of the currency at US dollar. But this is, I think, really good. I will use these. I have traded these in the past, and I will in the future because if you want to hold a position for a long time and don't care about swap, or need to hold like a negative swap position, or negative swap position, a position that would cost you money, this is a good way to do it because you will not be paying swaps or receiving swaps to hold a position long term currency. It's not. I'm gonna get it. Yeah, I guess. Just refreshed everything. There we go. So they have limited hours, just like any other exchange, New York Stock Exchange. That is true, but they're subject to commissions and other costs. I put that as wrong, even though it's true, because I mean, SpotFX is subject to commissions and other costs, probably more so. So this is kind of a weird thing to say about foreign exchange ETFs. And the last one is spot foreign exchange, is what we do. Some of the benefits of trading SpotFX is that the data is free. We get free charts, free charting applications. MT4 is totally free. There's a low barrier to entry, which is good, but it's also a double-edged sword. All right, that is the trading education for the day. The rest of it is the self-check-in. So thanks for watching. That's all you're watching. If you're watching this on YouTube, feel free to come over to Twitch and watch me live sometime.